Welcome to Investors Insights, where the week's topic is the next 100 days. A lot going on the next 100 days, so we want to kind of summarize this. But first, I want to answer a common question that we've received over the past few days, and that is, with the virus cases spiking, why is the market not trading back to like it did back in March? And couple points here. One, the market knows that it's unlikely that we have another lockdown reinstated. Also, the next point is hospitals are better prepared now than they were back in March to take new virus cases on. And so one thing we're looking at carefully here is the hospital capacity number, not necessarily the case growth, but looking at hospital capacity very carefully here, and that's going to be very important moving forward through this. But Adam, talk about the virus further. The virus still continues to be the hot topic with clients, so talk about that.
Yeah, thanks, Bobby. As you know, this is kind of taken over mainstream media, as March 11th marks the date that the World Health Organization marked coronavirus as a global pandemic. So now we're over 100 days, and our clients have been asking us questions. What have we seen over the past 100 days, and what does the next 100 days kind of hold for us? Certain industries that were affected the most include airlines, restaurants, and retail, as we've seen. Month over month, retail has gone up 17%, so we've seen a big boost in retail. That gives us good indication that consumer sentiment may be coming back into the markets. With summer coming up and people going to visit family and friends, this might be good for the oil industry and other industries as airlines and cruises may pick back up at travel. And we will see the consumer coming back into the market, and we might see some of these company earnings start to go up, and that'll be good for the markets.
Yeah, Adam, thanks for the update there. And then Trey, a few weeks ago, we talked about the tensions going on between China and Hong Kong. Give us an update on that, because that's going to be a potential cause for volatility in the future.
Yeah, thanks, Bobby. Yeah, so over the weekend, late last week, Beijing announced their new national security law when it comes to Hong Kong. They will be placing a dedicated central government official inside of Hong Kong's government that will allow the Beijing government to handle crimes against the nation, to handle intelligence in Hong Kong. And the reason this is important globally is that Hong Kong is treated separately from Beijing. There are separate trade relationships with Hong Kong, different tariffs, different financial regulations with Hong Kong companies compared to Beijing. If the developed world starts to view Hong Kong as the same as Beijing, then those special relationships will go away, which will increase trade barriers, increase financial barriers, and reduce the potential global growth for that area of the economy. This could create long-lasting negative impacts. And so the next 100 days and how the global economies react to Beijing's increased influence in Hong Kong will be very important to see how the foreseeable future looks for that area of the world.
Yeah, Trey, we're watching that very carefully, because that, again, has the potential to cause some volatility in the market, what's going on overseas. And then, Ashley, we've got second quarter earnings season kicking off here in a couple weeks. That's going to cause a lot of volatility, possibly, with companies having to show their balance sheets. But talk about corporate America and talk about the balance sheets we might be seeing.
Glad to, Bobby. One of the things that we've seen, sort of an arrow in the quiver, if you will, that companies are using to sort of get through the balance sheet pressure of COVID-19 is they are repatriating record amounts of their foreign subsidiary profits back in the United States. We'll remind our viewers that the tax law changed back in 2017 to give companies a more favorable route to do that. And they have done some of that, but that has really accelerated to records for the first half of this year. So you've got a lot of U.S. companies bringing those profits back. And that's a great thing for us here, because the more profits they bring back, to your point, Bobby, the balance sheets are better. The balance sheets are more liquid. Why is that important to your money? The more cash you got on the balance sheet, the more you can have there and pay payroll. And that's crucially important. So we never, back in 2017, we never envisioned, of course, a pandemic as a use of that. That's ended up being a great tool for companies in this unique time.
Yeah, so as you can see, a lot going on over the next 100 days. We'll continue to keep you informed, but please give us a call, send us an email if you have any questions. We want to keep you informed. Thanks for watching. Have a great week.